Hi again, everyone. I hope you're all doing really well. So in this video, we're going to take a dive deep into the recent developments surrounding Lucid Group, ticker symbol LCID. And I kind of want to respond to what I believe is a rather pessimistic and, I suppose, frankly, short-sighted article published by none other than InvestorPlace, which came out today, titled "Why It's Time to Abandon Lucid Stock." Now, let's set the record straight on what's really happening with Lucid Group and why I think the article misses the mark in a big way. First off, let's talk about Lucid's recent Q2 earnings report. Lucid produced 2,110 vehicles and delivered 2,394 vehicles, setting a new record for the company. Revenue came in at $200.6 million, beating analyst expectations of $192.1 million. Now, these numbers alone show that Lucid is making strides in ramping up production and meeting market demand. But of course, the article from InvestorPlace focuses on the negatives, pointing out that Lucid is still losing money, $790.3 million to be exact. Yes, Lucid is currently operating at a loss, but let's not forget this is an electric vehicle startup, not a decades-old automaker with established production lines and supply chains. The EV industry is capital-intensive by nature, and early losses are expected as the company invests heavily in scaling production, research and development, and expanding its market reach. What the article fails to acknowledge is that Lucid's loss from operations has improved year over year. And this trajectory is crucial as the company moves closer to profitability, though still some way away. Now, the InvestorPlace article casts doubt on Lucid's ability to survive without the financial backing of Saudi Arabia's public investment fund, which recently injected another $1.5 billion into the company. The article suggests that this is a sign of weakness, arguing that Lucid can't stand on its own 2 feet. But let's take a closer look at this claim. First of all, having a strategic partner like the PIF is a huge advantage, not a liability. The PIF isn't just a bank, it's a long-term strategic partner that believes in Lucid's vision and potential. The PIF's investment isn't just about keeping the lights on, it's about fueling Lucid's growth and positioning it as a global leader in the EV space. This latest infusion of capital will help Lucid launch its much-anticipated Gravity SUV later this year, a model that's expected to significantly broaden Lucid's customer base. InvestorPlace goes on to criticize Lucid's operations in Saudi Arabia, calling it an attempt to build an entire industry out of nothing. They argue that Saudi Arabia lacks the necessary infrastructure, skilled labor force, and supply chains to support a homegrown auto industry. But here's the thing. The PIF and Lucid are playing the long game. They're not just trying to sell a few cars, they're laying the foundation for a future where Saudi Arabia is a key player in the global automotive industry. Building a manufacturing base from scratch isn't easy, but it's a visionary move that could pay huge dividends in the future. The article also claims that Lucid's recent sales boost was only possible because the company cut prices, which in turn exacerbated its losses. This is a classic case of missing the forest for the trees. Price adjustments are a common strategy for any company entering a competitive market. Lucid is positioning itself to capture market share in an industry that's still in its infancy. The fact that Lucid is selling more cars, even if it means temporarily reducing margins, is a positive sign of growing consumer interest and market penetration. The real kicker in this article, though, is the assertion that the PIF will eventually cut its losses and abandon Lucid, leading to a crash in the stock. This, in my opinion, is pure speculation, and it overlooks the strategic importance of Lucid to the PIF's broader goals. The PIF isn't just investing in Lucid to make a quick buck. They're investing in the future of mobility, technology, and a diversified Saudi economy. The PIF has already invested $7.9 billion in Lucid since 2018, and they've made it clear that they're in it for the long haul. Let's consider the broader context now. The electric vehicle market is rapidly growing, and Lucid is positioned as a luxury EV brand with cutting-edge technology. The company's vehicles have received rave reviews for their design, performance, and efficiency, and Lucid is achieving 5 miles per kilowatt hour, a landmark efficiency that sets it apart as a leader in the EV technology space. As the market for EVs expands, Lucid is well positioned to capture a significant share of the high-end market, especially with the upcoming launch of the Gravity SUV. So, in conclusion, while InvestorPlace article tries to paint a bleak picture for Lucid's future, I see a company that's making strategic moves, has strong financial backing, and is poised for growth. Yes, there are challenges ahead. There are always going to be in an emerging industry, but Lucid is far from the doomed company that the article suggests. For investors with a long-term view, Lucid presents a compelling opportunity in the rapidly evolving electric vehicle market. So before you rush to sell based on one pessimistic take, consider the bigger picture and the potential that Lucid holds, which is something that I'm sure many Lucid stockholders already do now. Thanks for watching. I hope you found this analysis helpful. Don't forget to like and subscribe and hit the notification bell so you never miss an update from Lucid Group and other players in the EV industry and other stocks that I'm covering. Also, please share your thoughts on Lucid and medium and long-term expectations from the company. And until next time, may the markets trade in your favor. Cheers.